Hey everybody, this is Chris Tyler of Options Cat Stock Trading. In episode 5 today, let's review the latest price action on Wall Street, why and how Tesla remains a buy, and one higher beta stock that's taking a bit longer to enrich investors right now, but continues to be monitored bullishly for collaring adjustments and bull call spreads. But first, and before we dive into today's video, the chart on our screen is of the weekly Dow Jones Industrials DIA ETF. Since our last episode of Options Cat on Tuesday, the broader indices have continued to see some constructive backing and filling, as we anticipated might happen after a rally off the indices' corrective low. We're still waiting to see if a late high-powered follow-through day, or FTD, can signal and allow for more confidence in the longevity of the rally and confirmation of a trend change from market correction to an actual bull market. That all said, what we do like at the moment is that the current pullback in the diamond is now testing a weekly inside bottoming pattern. It's a pair of weekly candles, and we can see that this week's price action is pulled back enough to test the highs of that inside candle. Now, if the two candle formation holds, new all-time highs over the next 3 and 6 months looks technically compelling and offer a very attractive risk to reward setup. So the modest easing of animal spirits in the broader market over the past couple sessions has largely resulted in stiffer pullbacks for larger cap, higher beta tech stocks. That's not exactly surprising news, right? Well, one exception has been Tesla, ticker TSLA. And that might be a shock to investors. The embattled and volatile shares were discussed in our last episode as an out-of-the-money bull call spread candidate. And despite the market's modest selling pressure, shares actually hit a modest new weekly high intraday today. Given Tesla stock's relative strength, and now with a pause in the broader averages, Options Cat continues to like Tesla's own weekly bottoming pattern out of a bear market, and the share's upside prospects towards 350 here at the 50% retracement level over the next several weeks. Finally, and a mea culpa of sorts, shown on the screen is a daily chart of quantum computing upstart D-Wave, ticker QBTS. In an episode from last week, in what feels like an incalculable eternity, shares have quickly gone from a position of relative and pattern price strength to one of relative weakness and deeper pattern testing. A discussed bullish cup with a constructive high handle for upside momentum has been dismantled, with the pullback in QBTS stock now testing its pattern mid-pivot, as well as a 50% retracement level of the pattern for support. An outlined $11-17 collar that was designed for momentum and new highs in shares has helped in cutting our own losses to about half of simply owning the stock outright. However, the correction hasn't been so severe as to allow for picking up more QBTS stock for no cost, and a key part of our collar trading methodology. That all said, it's our view the current price levels in QBTS could present an attractive spot for buying shares if a daily chart price confirmation in the high 7s to low 8s occurs in the next 1 to 2 sessions with a stochastics crossover. Now, as a starter position for that type of confirmation that was just laid out, possibly the May 8-11 bull call spread, which is priced for 75 cents or 10% QBTS stock risk, might be considered by investors. This offers a threefold reward, or $2.25, if shares can find a bottom in the next couple days and then proceed to finish above $11 at May expiration.